We finally getting some good news for the stock markets and indeed for the global economy. Well, it certainly seems so. What we're seeing in America is that inflation is lowest that it's been since 2021. So just think about that. We're just over 2 years ago that inflation started to increase in 2021. And now we're seeing for the first time inflation falling at the lowest percentage since March 2021. But what does it really mean? Has it really peaked, or is that a temporary figure? Well, let's have a look. We're seeing a slowdown in prices. Of course, the Fed and banks around the world have raised interest rates. That, of course, has caused mortgage rates to go up and caused credit rates to go up. It means that people that have borrowed money are increasingly finding it difficult to spend money. That means there's a slowdown in the economy. We're seeing that in some companies' figures, but not in some companies like the tech companies. So we've seen that tech shares in particular good tech companies have rocketed, and some of those prices have increased dramatically. Can it continue? Well, the answer is yes, it can continue, because if the interest rates can stay as they are and not be increased by too much, it's expected the Fed are going to increase rates very slightly one more time. But even then, everybody's looking at it now and saying that interest rates are potentially either at the peak or close to the peak. So that means that we're forward thinking interest rates are likely, highly likely, to be coming down in the next 12 months. What does it mean for you as an individual? Well, if you're looking to invest money, some people prefer a fixed rate. Right now, you can lock in a good fixed rate of return for 2 years. Always talk to a financial advisor. deVere have opportunities. You're welcome to look us up. If you're looking at mortgages, don't fix right now would be my personal opinion, because if you fix at today's rates, it's likely to be one of the higher rates that you're gonna actually be fixing at. If you're going to be taking and you're going to invest into property, go variable in my opinion, because you're likely to see interest rates fall quicker than most people expect. Within 12 months, you're going to see interest rates start to fall. What does it mean for the stock market? Well, you've got these companies that have taken advantage of AI. They could well, if they can actually use AI to maximize their profits, and other companies can. Again, that could even more pull down inflation. Why? Well, if companies become more effective, if they become more efficient, then of course that actually means that you're going to get more profits from companies, but also potentially it means that companies can be more effective in producing various services, and again that could pull down inflation. Also at the same time, be aware, particularly if you're a global investor, that the dollar fell yesterday. Expect that to continue. In fact, if you're someone that likes to look at graphs, you'll see that it's actually broken a trend line and potentially could fall further. Again, lots of people are forgetting this, so important to remember that as the dollar falls, that actually, because commodities are priced in dollars, means that they fall in price too. So again, that's another thing that can reduce the effects of inflation. It's actually a good time to be looking at your portfolio. It's a good time to be looking at how your investments are. Some companies, they've struggled because interest rates are high. Can they return? Again, you need to look in depth. You need to talk to an advisor. Unless you've got some experience, then if you've got experience, you may see that there are particular companies that have struggled because interest rates have been high. As they start to fall, those companies, if they're quality companies, could of course accelerate. And then of course you come to the big one, which lots of people are fascinated with. What can AI achieve? And if we think about it, we could really be in just a really great situation now. Finally, some good news where we're seeing inflation peaking, companies using AI, becoming more effective, the supply chain much better than it has been for over 2 years. Job inflation starting to fall as the economy rebalances and people find that they move their skills to different type of companies. Really could be a good situation. Yes, I'm optimistic. Could we get some volatility whilst we have this particular still rebalancing in there, potentially another rate increase from the Fed? What would be the worry if they increase too much? Fairly obvious. obvious. If they increase too much, potentially the economy falls further. So there's always a cloud, and there's never a sky that's completely blue, unfortunately, in the financial world. So don't expect ever a completely blue sky. If you want to see the cloud and you only want to look at the cloud is, do the Fed or banks around the world over tighten? If they over tighten, they crash the economy. And if they do, interest rates go fall too. So if they crash the economy, then again, you'd expect them quickly to try and change that around. In other words, I'm optimistic, even though there's a cloud in the sky. If you subscribe to my YouTube channel, I'll keep you up to date with what's happening in the markets and make sure you're fast, informed in a concise manner. Newsletter coming out. I'll put a link below later on today. So if you want to get weekly information and tips and ideas on investing, and just ideas and a good quote, I always do a motivational quote, in general of, I think, what helps you to be successful. Thanks for watching the video. Please like and share, helps me with the algorithm.